Hi, welcome to the NIRI 2019 conference here in Phoenix, Arizona. I'm joined by Joe Saluzzi of Themis Trading. Thanks so much for joining us, Joe.
Thank you. Thanks to me.
Absolutely. So you participated in one of the general sessions earlier this morning about market structure. We're seeing so many changes to market structures right now, an increasingly fragmented landscape, some potential new exchanges popping up and so on, and this was some of the material you were discussing this morning. How do you suggest IROs keep up to speed with these changes?
Yeah, it's tough, and there's, like you said, there's 13 stock exchanges now and 32 dark pools, and there's another stock exchange that just got approved called the Long-Term Stock Exchange. It is very difficult, but I encourage them, as we were mentioning earlier in the conference, to talk to the sell side, talk to the buy side, talk to your regulators, and really dig down into. You need to understand market structure, because markets they are today are way different than they were, say, 15 years ago, when everything traded on the floor of the stock exchange and there was 80% volume there. Now it's this, as you mentioned before, a fragmented landscape of liquidity, where your stocks are really more of, I hate to say it, casino chips sometimes, where HFT or high-frequency traders are just trading them back and forth. They don't know anything about it. The volume that you see in your name most of the time is not real, let's just say long-term holder volume. It's a lot of high-speed traders just going back and forth. So you need to understand who's doing that and why are they doing that. There are certain incentives that they get for trading on certain venues, which is sometimes distorting liquidity and distorting what we think are the point of the market in the first place. You're supposed to bucket liquidity. What we did with the fragmented landscape was we pretty much shattered it. So you got to kind of put it back together. But it is a difficult task, I'll tell you that.
Sure.
And guys like me who study this stuff continue to find new stuff out every day.
Yeah. It's amazing. And speaking of where trades are occurring and so on, of course, the transaction fee pilot is a big talking point at the moment. Perhaps one of the kind of divisive current market structure debates that we have going. It was obviously a talking point this morning. You were on the panel with Brett Redfearn of the SEC, who's kind of overseeing the pilot. So again, kind of what advice do you have for IROs getting up to speed on it? And what sense do you have of issuers kind of understanding the transaction fee?
Yeah, that's a good one, because I think what happened there was that the major exchanges went to the IROs and actually convinced them to write some letters against the pilot, which I read some of these letters and I really didn't think there was a deep understanding of the issue when they were writing them. It sounds to me like somebody was asking them to write a letter, which the SEC saw through and still approved the pilot. And the goal of the pilot is to reduce some of the conflicts of interest in games that go on, for instance, on a higher venue, a higher rebate venue, or a venue that's inverted. In other words, it's backwards. Normally you get paid to add liquidity and you pay to take an inverted venue as backwards. It's a lot of excess complication that really isn't necessary. Our opinion is that it should be a flat fee structure. It should be, let's just say, 1/10 of a penny to pay to make liquidity, 1/10 of a penny to take liquidity. It would be really simple. In fact, the exchanges would make more money than they're making now on a per trade basis. But you need, again, going back to the structure, you have to understand, why does that matter? Why do rebates matter? Why do market access fees matter? Because it distorts the routers that are being used to trade your stock, and then if it's distorting the routers, it may be distorting the price. So you really need to understand that.
Sure. I mean, I suppose to play devil's advocate, one of the concerns we've heard expressed about the transaction fee pilot is that it would drive more trading activity to dark pools, for instance, during the duration of the pilot. I mean, do you think that would pose challenges for IR teams in terms of tracing what's happening with their stock on a daily basis?
Let's just say right now there's almost 40% of volume in a dark pool. And on your listing exchange, I would say it's 20% or less on both the major exchanges. So you're only seeing a sliver of information as it is now. That doesn't tell you. If I knew 1/5 of the information going on, it tells me nothing. That means that there's 80% of that volume actively participating in your stock that you don't know about. And in fact, when dark pools have a bad name, and by default, I don't know who decided to name them a dark pool.
It sounds slightly ominous,
very sinister, right? Yeah. But there's a few good ones. LiquidNet, Luminex, BIDS. These are all what we would consider crossing networks as opposed to dark pools, where you go to cross liquidity between two legitimate holders. Let's just say I'm representing a long-term buyer, somebody else is representing a long-term seller. If we can match up with minimal leakage, that's a good thing. There's nothing wrong with that crossing network. Now, we also need lit price discovery, because we need to figure out, we can't have 100% dark, you'd never know the price.
Right.
So, but there is a healthy balance, I think, between dark and lit. It doesn't all have to be lit, it doesn't have to be dark. So I would argue that, no, the pilot is not going to hurt that, and it's not going to hurt liquidity, because they're arguing, no one's going to buy your stock anymore, no one's going to make a market. Well, if they're not willing to do it now, why are they going to do it? For instance, if you're getting paid a third of a penny versus a tenth of a penny, does it really matter if you're interested in really buying that stock, or is that liquidity more transient and it's only there because they're clipping, it's trying to run ahead of somebody, whatever it may be?
Sure.
So we'll see, but I don't know the answer to the pilot, and nor does the SEC, which is why it's a pilot.
Yep.
And the SEC said, let's test it and see what the data says, similar to what they did with the tick size pilot. And if the data is positive, fine. And if it's not, well, guess what? You can roll it back.
Sure. And then final question for you: what are you working on? What are your priorities for this year at Themis Trading? Like, what's your day-to-day look like?
Sure. We're always obviously, we deal with our buy-side clients all the time.
Yep.
We're constantly interacting with them. On a daily basis, I'm trading on behalf of them. More on a regular basis, we're talking market structure and the changes that are going on. And in particular this year, there's a number of things. In addition to the transaction fee pilot, there's more disclosures on dark pools called ATS, Form ATSN, which is a big deal. And then there's also order disclosure rules for brokers coming through. So all of these things which were enacted, which were finalized by Brett Redfearn and Jay Clayton of the SEC are going to help add transparency to the broker process, to the routing process, which we think will help make markets fairer.
They've certainly been committed at the SEC, haven't they, to engaging on these issues over the last couple of years and thinking about transparency.
It's tremendous. And I mentioned this morning that I've been doing this for 17 years with Themis Trading, and probably 14 of those years we've seen nothing but roadblocks at the SEC. But for the last couple of years with Brett Redfearn and Jay Clayton, things are moving in the right direction. They're not afraid to get things done. They're not afraid to put out a proposal and say, even though some constituents may not like this, we think it's the right thing to do, so we're going to go ahead with it, which we agree with, by the way, because these are all for the benefit of the market. And then the number one goal also is to help the long-term investor, to help the real holders of these corporate stocks, right? Not necessarily the folks that are bouncing in and out and just trading them for their own account. How do you help long-term investors? You add fairness and you add transparency. So I think the SEC is doing a great job.
Sure. Excellent. Well, thank you so much for joining us, Joe, and enjoy the rest of your day.
My pleasure. Thanks, Ben.
Cheers. Thanks.